Distinction between a hedge fund manager who takes tremendous risk and is right and gets paid for it, and those who have enriched themselves at the expense of the American taxpayer through a system of misrepresentation, fraud, or simply getting the legislation changed. Ron Geffner, former SEC enforcement attorney, Jake Zemansky, Zemansky and Associates, Bill Siebman. Bill, what do you think the objective today is?
Well, I think they're going to try to bring out what these hedge funds really have done and see how they affect the system. It's very clear that because they have no transparency, they increase the risk in the system. But you can't blame the hedge fund managers. That's what the law says they can do. And, you know, thanks to Greenspan, they had plenty of money to do it with. They dealt with the most sophisticated investors. And the fact of the matter is that they were smart enough to get into heads I win, tails you lose deals.
Ron, do you buy that? In other words, these people were smart enough to take these risks, or willing enough to take these risks, and able to take these risks. They were right that, again, a lot of these things should not have been at the prices that they were. They made a lot of money as a result of being right. Should they be in front of Congress today?
Well, first, I'll take issue with the other guest's statement. Heads I win, tails you lose. I don't think they were in riskless investments. They had investment thesis that they followed through with strong conviction. And how can you be mad at them for actually following through on their convictions and profiting from it? That's called capitalism.
Well, I don't know that's what Bill was saying. Go ahead, Bill.
Well, I was just saying that the contracts they had, they shared in the profits but not the losses.
Jake, what is your perspective on this? And how do you make the distinction between those who are selling something like a credit default swap and without the collateral's not disclosed, they're keeping 2 cents on the dollar, basically insuring something that can't be insured? Warren Buffett's the first one to say that's stealing. And somebody who speculated on an outcome with a lot of money because they had control of a lot of money and were right.
I think the hedge funds have a lot of responsibility for the problems we have in the market.
How so?
Well, number one, they're taking enormous risks with other people's money. They get paid if they get performance. They get paid on assets.
But they also lose that. They also lose that money. Hold on one second. They also lose that money if they're wrong. In other words, that risk appetite is balanced by the fact that you can be wiped out, as we've seen the past 2 months, in the blink of an eye.
But there are too many problems here. There's allegations they're using insider trading
but that's
to
a different
manipulate
conversation. I don't want to
short selling.
I'm having a very a specific question, which is, why should they be punished? Listen, there could be 10 things you can find, but if all they did was accurately speculate on the direction of the financials and housing and make a lot of money as a result, don't we want to encourage people to be skeptical of things that it turns out should not have been what they were? And what better way to encourage them by creating a financial incentive for those who do it best?
Well, sure, but they've lost a whole lot of money the past year. They're retail investors.
You understand my question?
Yes.
Can I
go ahead, Ron.
Yeah, one of the things you first of all said, other people's money. I don't know if you realize a lot of the hedge fund managers have a significant amount of their own assets in their own funds.
We understand that, but what's your answer to my question, Ron?
Repeat the question. There's a lot of them on the table right now.
Say that again?
If you can repeat the question, because there are several of them.
Yeah, all right. The question quite simply is this: why should these people be punished for being right?
They shouldn't be punished, and I think right now hedge funds have served as a scapegoat for the last several years. I have no problem with Congress trying to get information and better understanding the causes, not the cause, because there's 50 or more causes for some of the problems we're having. But when we talk about, they're mentioning understanding holdings and leverage and strategies. Well, guess what? Investment banks and brokerage firms, they're equally responsible.
Exactly.
And guess what? You had FINRA in there looking at their holdings and their leverage. Did that help? No. And I think what they're doing, unfortunately, is setting the public up for some false expectation that some of this stuff can be controlled, and risk can't be controlled to the degree you were talking about.
Bill, why are we not seeing the people that advocated the leverage, those that sold the credit default swaps, those that took the hundreds of millions of dollars in doing that, the people that Warren Buffett referred to as creators of weapons of mass financial destruction? Why are those not the people that are in front of Congress as opposed to the few people, and it's a handful, that accurately speculated this was all nonsense?
Well, obviously you want the richest people before Congress because they're the best targets. But the fact of the matter is that they're all in the same boat. They all dealt the same way. And the one thing they really got away with, which is their tax treatment. That is absolutely outside of the pale. To say that that's the way the rest of the people are treated is not true. It was earned income, and they treated it as capital gain.
Yeah. You get the last word, Jake.
There are enormous impact from hedge funds. They represent sometimes 50% of the trading on the stock exchange. The movements of those hedge fund tradings affect us all, retail investors, pension funds. So they have to be looked at and probably regulated.
But you're making statements that the hedge funds had the ability to move markets and affect specific positions. Do you have access to information I don't have? Because I haven't seen support showing, well, this hedge fund or these 5 hedge funds traded so much in one security that they drove it up or down.
I think it's pretty well documented. The SEC is looking at this. There are allegations that they drove Bear and Lehman into the ground. I think we really have to take a look at what these funds are doing.
All right. Ron, Jake, Bill, we'll keep you. Thank you guys. Melissa, what's going on?
Well, Dylan, coming up, the Treasury Department bail